Audit risk for Eukare. NPO audit risks for not-for-profit organizations like Eukare often include fraud risk, misappropriation of funds, especially with cash donations or grants, revenue recognition risk, errors in recognizing donations, grants, or restricted funding in the correct period, expenditure misclassification, misallocation of funds between programs, administrative, and fundraising activities, going concern risk, financial difficulties due to dependency on donations or limited funding sources, compliance risk, non-compliance with regulations or grant conditions leading to penalties. 2. Audit approach for Eukare. Audit approach for Eukare should be risk-based and adapted to the unique nature of NPOs. Key steps include: understand operations, review Eukare's mission, funding sources, and key programs, identify key risks, focus on areas such as donations, restricted funds, and compliance with donor restrictions, evaluate internal controls, assess controls over donations. We are going to cover a question from the December 2008 exam called Eukare. This is question 4 in the exam and is for 20 marks. This question covers the following syllabus areas: audit risk, the audit approach, and not-for-profit organizations. Remember that you should allocate 1.8 minutes for every mark in the exam, and for a 20-mark question such as this, you should spend no more than 36 minutes. To successfully complete this question, you will need to plan your answer, taking care with the time allocated to each part of the question. Use the scenario where needed, and be clear and efficient. It may be worth getting a copy of this question in front of you at this point. That way you can follow the requirements and scenario as we talk through them. As with any application question, it is important to understand the requirements before getting into the detail of the scenario. When it is then time to read the scenario, you will find it easier to highlight what is needed to formulate your answer. Let's now start planning and structuring the answer. Part A asks you to explain the term audit risk and the 3 elements of risk that contribute to total audit risk. This requirement is above the scenario and has no relationship to the scenario below. You must use your knowledge from your studies to be able to answer this. It is for 4 marks, and therefore remember no more than about 7 minutes should be spent. This style of question appears every so often and is usually very well answered by most candidates. For 4 marks, it is simple to plan how we are going to get the marks allocated. 1 mark for a definition of audit risk, and then 1 mark each for an explanation of the 3 components of audit risk. To define audit risk, we remember that auditors need to calculate this at the planning stage. They need to ensure any problems relating to the audit have been considered so that enough time and resources are given to the audit assignment. The definition of audit risk is the risk that the auditor will give an inappropriate opinion on the financial statements. For example, there could be material misstatements in the financial statements, and the auditor has stated the accounts are true and fair. Auditors have an audit risk model that they can use to consider all risks associated with the audit. The model breaks audit risk into 3 components and is presented as AR is equal to IR times CR times DR, with AR standing for audit risk. IR stands for inherent risk. Inherent risk is the risk that the auditor will give an inappropriate opinion due to the nature of the client. What we mean by nature of the client is basically what the company does and how it is structured. These inherent risks could also relate to the industry they are in. There is very little that can be done to reduce inherent risks. CR stands for control risk. Control risk is the risk of the auditor giving an inappropriate opinion due to the client's poor controls and systems. If the client has weak internal controls, there is a greater risk of misstatements being present in the financial statements, which the auditor has to find. Little can be done in the current year regarding control risk, but remember recommendations can be made to improve systems and controls in the future. DR is detection risk. Detection risk is the risk of giving an inappropriate opinion due to the auditor not spotting a material misstatement. The more problems a client has, the greater the risk of the auditor not finding all material misstatements. The key is to assess inherent and control risk first. If it is a high-risk client, then detection risk must be low. The only way to reduce detection risk is to increase the time spent, the skills, and sample sizes during the audit. Therefore, our 4 marks can be allocated as follows. 1 mark for audit risk is the risk of giving an inappropriate opinion. Then, inherent risk is the risk of an inappropriate opinion due to the nature of the client. Control risk is the risk of an inappropriate opinion due to poor systems and controls. And detection risk is the risk of an inappropriate opinion due to the auditor not spotting the material misstatement. Part B links to the scenario regarding the charity organization, Eukare. It asks to identify areas of inherent risk in the Eukare charity and explain the effect of each of these risks on the audit approach. This is for 12 marks, and therefore no more than 22 minutes should be spent. We can see the requirement asks us to identify from the scenario. We must find examples of inherent risk mentioned within the text. This is an unusual take on the audit risk scenario, as at F8 they usually do not specify what type of risk you need to explain. This also makes the question more difficult, as you can only find potential audit risks that relate to the nature of Eukare and how they are structured. Time should be taken to analyze the scenario. Underline, highlight, and make notes all over the scenario to identify as many inherent risks as possible. This is a 12-mark question, but it is not only looking for inherent risks, it also wants you to explain how each of these risks found would affect the audit approach. Therefore, for 4 marks, they are looking for 6 inherent risks and 6 explanations of the audit approach. Your answer can be set up in a table format. 2 columns with the headings from the requirement can be set up. This presentation makes it more quicker method of answering, but also makes it easier for the marker to see the points being made and allocate the marks. The 6 I have identified from the scenario are: they rely wholly from voluntary donations. There is a detailed constitution which explains how income can be spent. Administration expenses cannot exceed 10% of income in any year. Cash is collected in shopping areas from volunteers. Some individual donations have specific clauses attached to them. And there are complicated tax rules for charities in the country they are based. Setting up our 2 columns, let's break down the first inherent risk identified. Eukare rely wholly from voluntary donations. There is a risk that income would fall during times of economic decline, which could affect disclosure requirements in the financial statements. Disclosure on going concern may be inappropriate for the charity. In terms of the audit approach, this makes it difficult to assess their foreseeable future, as it depends on what others are likely to give to this and any other charity. Going concern review would need to be detailed and quite difficult to conclude. For this and every other point, you are allocated half a mark to identify from the scenario the inherent risk. A further half a mark to explain why it is an inherent risk to the auditors. Then a whole mark allocated to explain how it would affect their audit approach. Be careful to explain your risk as a risk to the auditor and not as a business risk to the client. You will lose marks if you do this. There is a detailed constitution, which explains how income can be spent. There is a risk that income may be spent on items not within the aims of the charity, and disclosure on this may be incomplete. The audit approach would be to ensure the auditors understand the spending restrictions. They should carefully review expenditure to ensure it is suitable. Administration expenses cannot exceed 10% of income in any year. There is a risk that the charity may cover up expenditure in excess of 10% by misallocating costs, causing misstatements and imbalances. The auditors must review other accounts where costs may have been misallocated to identify possible misstatements. Cash donations are collected in shopping centers by volunteers. There is a risk that some cash may be stolen and donations are incomplete. This would lead to incomplete income recorded in the financial statements. Audit procedures to confirm completeness of income are unlikely to be sufficient, as it is impossible for the auditor to follow all volunteers around and record what is donated. Therefore, this would affect the opinion in the audit report, as the auditor may not be able to obtain sufficient appropriate evidence to confirm that assertion. Some individual donations have specific clauses attached to them. This could be that amounts are not allowed to be spent, and other amounts are to be spent on certain activities. There is a risk that the charity does not follow these instructions from the donor, and this is not disclosed in the financial statements. The audit approach would be to review documentation on individual donations and the detailed spending requests, and compare this to the actual expenditure made by the client. Any discrepancies should be reported to management. Finally, there are complicated tax rules for charities in the country Eukare are based. There is a risk that the tax rules could be broken by calculating tax incorrectly and not understanding the detail properly. This causes a misstatement in the tax balance in the financial statements and potential fines. The audit team should include those experienced and familiar with the tax rules, so that careful review of the tax calculations can be made. And so for our 6 inherent risks, your approach should be to highlight as many inherent risks as you can find in the scenario. Set up 2 columns, one headed inherent risk and the other audit approach. Include 1 sentence to identify the risk. Include at least another sentence beneath explaining why this is an issue and it's a risk to the audit opinion. On the other side, the second column, then include at least another sentence explaining how this issue would affect the work of the auditor during the audit process. The final requirement, Part C, asked you to explain why the control environment may be weak at the charity Eukare. This was for 4 marks, and so no more than about 7 minutes should be needed. It was also for Medi candidates, one of the more challenging requirements in this exam. It was not a common question and therefore required a bit of thought. One thing to note is that within an exam, there are often questions like this. The key is to keep your cool. Remember, this is only a few marks, and even a couple of ideas would achieve a pass on this section. To score marks, we need to think about why the control environment would be different at a charity like Eukare compared to another type of organization. It would therefore be beneficial to understand what a good control environment has. For auditors to assess the control environment as good, they are looking for evidence that the management have a good attitude, awareness, and actions towards controls. It is possible that the trustees may not have the focus or the knowledge to ensure controls are strong. There may be an impression that controls are not important, and this is likely to filter down to the people working and volunteering for the charity. Volunteers make up a proportion of the staff within the charity. These tend to be part-time and temporary, and therefore work handovers are regular, making the system unreliable and misstatements probable. It also means explanations are difficult for the auditor to obtain as individuals are no longer available. There would be a lack of segregation of duties. This would be mainly due to restricted resources available to the charity. There is therefore a risk of misstatements, as review of work or even an understanding of responsibilities is unlikely. Due to the lack of organizational structure, it is unlikely to be an internal audit department. This lack of resource means the charity will not be reviewing control systems for deficiencies and looking at ways to improve the way they operate. So to conclude, 4 weaknesses in the control environment would be: trustees do not have the time or skills to implement strong controls. Volunteers tend not to stay for long periods, causing mistakes in handovers and a lack of explanations for the auditor. There is a lack of segregation of duties, and there is no internal audit department reviewing those controls. Please remember, to be successful in this type of question, we need to plan the approach and ensure we have identified how long is needed for each part of the question. Use headings to introduce your answers. Space out your points so it's clear for the marker where the marks can be allocated. Ensure you reference each part of the question. Finally, if there is a scenario, use it. This information was given to you for a reason, and at F8 they are trying to see if you can apply your knowledge to a given scenario, and not just be able to remember the facts. I hope you found this video useful. Thank you and good luck.